Welcome back. The stock of the day, the stock of the hour definitely is Federal Bank. Fantastic reaction to what seems to be a great set of numbers as well. Mr. Shyam Srinivasan, MD and CEO of Federal Bank, is now joining in to give us some more color into the bank's performance. Thank you, sir. Good afternoon and thanks for joining in. Lata is also joining in for this chat. I'll just open with the first question. The market seems to be taking a lot of heart from the fact that your slippages have fallen so dramatically. Asset quality maintained at GNP of 3%. Is the worst over?
Yeah, Surbi, I think we had guided at the end of our Q4 outcomes also. It was a part of it was one-off consequence of the Feb 12 circular. So back that out, our performance has then been and even now consistent, and we believe this should continue. So okay. We are staying on our guidance of the overall credit portfolio and the quality of the portfolio.
Okay, Shyam, congrats. It's definitely, as Surabhi said, numbers which the market has celebrated with a 13% uptick for your stock price. But, you know, the other part of the February 12th circular is that if stressed assets over 2,000 crore are not resolved in 6 months, that is by August end, they will go to the NCLT. You have no share in those 70 odd assets over 2,000 crore?
Yeah, Lata, if you've seen our numbers, the overall restructured standard book, which was about 1425 crores at the end of December, is now down to 400 odd crores. Okay. Sorry, 500 odd crores. So that book was pretty much recognized in Q4 and a tail of it in Q1. Barring Air India, we don't have any other accounts in that of any chunky nature, and therefore the impact of that circular on us is almost non-existent. Okay.
Well, just a minor digression. There is almost as if to join in the good news, PTI announcing that the Finance Ministry may infuse capital in PNB, Corporation Bank and Central Bank, and a total of 10,000 crores. I think in PNB they will definitely do it with speed PNB, because it would get into PCA or prompt corrective action. So I guess that is on expected lines. But Shyam, to come back to what is a very good story, would you now work your way towards reducing? Is there a target to which you will bring your NPA simply because your good book is growing at 20% plus?
Yeah, see, if you wind back, we were at 2.48 gross NPA and trending down. And the consequence of that one-off sort of drove it up. Our credit growth has for now 9-10 quarters been north of 20%, most close to 24-25%. So if you see this run rate, and which is what we are minimally focusing on, it should naturally, as a consequence of a coincident, as in the incremental slippages over your incremental credit growth, the reduction will be visible. Okay. Now the degree of target, I don't want to put a number because our focus is on making sure the credit costs are on guidance. We had guided for 65 to 70 basis points of credit cost. That we are very confident of delivering in FY19. And going into 20, it should get better. But minimal, let's focus on 19 outcomes. We believe that guidance of 65 to 70 basis points will be what we'll deliver. As a consequence, all this will start looking at. Okay. But the better number to look at is the stressed asset portfolio, which is sequentially come down from 2.28% to 2% of our average weighted assets. At one point, it was 4%. So it's virtually halved in 8-10 quarters.
Okay. I'll come to the deposits in a bit. Advances have grown by about 24%. That's tidy, quarter on quarter up 4%. Can we keep? Can we take 24% odd as the run rate that you will achieve? Loan growth.
Yeah, I mean, if last 9-10 quarters is anything to go by, that's the run rate, and you would have noticed it's fairly widely distributed. It's not anchored on one business or the other. Corporate grew 32, retail grew 28, parts of SME in some geographies grew 24. Weighted average came to around 18, but that's because in certain geographies they are temporarily de-emphasizing given the markets. So a 20% plus credit growth is something that we've done for many quarters, and I'm fairly confident that should be repeatable or even better.
Okay. No, I'm asking you whether it is better not whether it will be repeatable, whether it will be better, because there is a trend of private banks taking more market share from public sector banks. So both for deposits and advances, deposits are growing at a run rate of 16% plus. Will you do better in both in the remaining 3 quarters?
Yeah, I think the deposits number is actually 16 is a slightly inferior number to what, because you see we have run down 3,000 crores of CDs.
Okay.
If you put that back, our growth rate on deposits also is matching up. We consciously degrew our CD book by 3,000 crores. Matlab we didn't renew it.
Okay.
So both are growing at market, at least 3x of the market.
Shyam, hi, good afternoon. I just wanted a newsy point being out of the way because my reporter is asking if the IDBI Federal Life deal is off.
Anuj, I can't say whether it's off or on. All I can say is at this point in time, one of the partners has got a new investor or is likely to get a new investor. So the conversations haven't been completed. I think we will know maybe like 3-4 weeks out.
Okay, but any idea where it might lead? I mean, that was going to be my final questions to you. Where will it lead? Will it stop short? Will IDBI, LIC simply subsume Federal because it's the owner? Is that possible? Subsume, I mean IDBI Federal.
No, I don't have any answer to that other than the fact that IDBI Federal through all this, to their credit, has performed remarkably well, both in FY18 and in the early part of FY19. So I am glad they have not lost focus, which means we benefit in the process. So that's my single focus. We believe that something will become clearer over the next 30-40 days.
You will also benefit if you are able to sell off those shares at this juncture. So that's why we are asking, as for the benefit of...
Lata, I think we must understand the context of it. No, I think we must understand the context. I don't need that money in a hurry.
Yeah.
So as long as it's producing value, we are not in any form, we are not neither stressed for capital nor performance. So I am not at all fussed.
Okay. Finally, I wanted to ask you about margins. There is a small shave off compared to your year ago levels. You all had done 3.4 and 3.3 in the past in FY18 on several occasions. So will it be under pressure? I mean, will it remain at 3.1 thereabouts because of the rising cost of money?
No, I think margin going up to 3.2 is our full year sort of guidance.
Okay.
And I'm hopeful that it will trend there. Credit growth is fairly good. As slippages tend to keep coming down, you are ensuring that the reversal of interest income is not there. So really, it's not about new credit being much higher priced. It's a list of things that interplay between the mix of the products, credit standards, credit quality. So I'm confident that around 3.2 is very much possible.
Okay, let me end where I began. The February 12th circular also makes life difficult for borrowers. One-day default will be, followed up with restructuring. It also makes bankers more powerful because everybody has to report the first default to the CRILC on the following Friday. Can you just sum it up all for us? Do you think both for the bank and for the banking sector, these two rules will reduce the flow of NPAs because you simply recognize them earlier?
Two things will happen and this is, I think, people end up discussing this only for the very big tickets. We must be mindful it applies to a range of customers, even for small and medium and micro establishments. So it is bringing about some behavioral change, but like in any other behavioral change, the customer also has to readjust to a very different reality. They've been used to paying on or before the last day and also or in a day past and expecting to keep the account standard. I think that's fundamentally shifting. So give it 1 or 2 quarters. I'm already seeing between last year March and this year Q1 first 3 months of this quarter, the behavior has started changing where customers are meeting the demand. So I am quite sure by September end this will stabilize and it will produce a new kind of recognition of credit. So the SMA 0 will start coming down.
Okay, fair enough. And just recounting all the key takeaways, NIMs are likely to be 3.2%, advances growth at 24%, credit cost at about 60 basis points. Can you just wind up with any guidance?
70.
Okay. Can you just wind up with any guidance on ROA or ROE?
Yeah, I'll just repeat what I said in the May meeting. We are targeting an exit ROA of 1%.
Okay.
We are looking at the credit cost between 65 and 70 basis points. Credit growth, I'm confident we will be in the number that you mentioned. And as a consequence, everything sort of falls into place.
Okay. Thank you very much, Shyam Srinivasan, for joining us. Federal Bank share after the interview has gone up 20%.